So you see our first candle smash over 100 pips, then our second candle does it over 200 pips like it was nothing. What is going on, guys? Common Forex and Maxman here. Welcome to the YouTube channel. Today I'm going to need every single one of you to grab your pen and your notepad. Actually looking at fundamental analysis today. So today, you know, there are so many instances where you hear so much noise about fundamentals, NFP, CPI, the news, the market will be volatile because of the news today. You hear so many things like that. I'm going to explain to you what exactly that entails and how to take advantage of fundamentals when they are released. Today, our primary focus will be on CPI, which is also known as inflation. As traders, there are actually two main forms of analysis we have on the market, meaning that there are two ways we can actually catch trades on the market. The first one is technical analysis, which entails every single video I've done so far, where we look at the charts, we look at the trends, the turning points, we look at the price action of the candlesticks. Basically, we are looking at the charts and exactly how the market is performing to make a speculation as to where price is going to go. That is what we mean by technical analysis. The other side is fundamental analysis. With fundamental analysis, you are basically looking at economic data, geopolitical events, any single metric which will tell you whether to buy or sell a currency, because there might either be strength or weakness in the currency. Take Ghana, for example. If you are from Ghana, any single information which tells you that our city is going to be strong is what we call a fundamental data. So our interest rate, our GDP, our inflation rate, any single information, whether there is political instability in the country or not, any single information which tells you that our Ghana city is going to be strong, so investors should buy into it, or it's going to be weak, so they should sell it, is what we mean by fundamental analysis. That's the simplest explanation I can give you for fundamental analysis. So if you are doing fundamental analysis, it means that you are basically trying to buy or sell a currency pair because you are expecting strength or weakness in it based on any economic data or any news events that affects that particular country's currency. I know you're already excited for today's session, so before we start, make sure you subscribe to the channel. It's very important to smash that like button, share with as many retail traders as possible. We'll be right back. Explain what fundamental analysis is. Now let's go on to explain what CPI is. So CPI in layman's terms is what we call inflation, which is a persistent increment in general price levels of goods and services produced in an economy within a specific period of time. That's what basically inflation is. So you go to buy your fuel today, they tell you a gallon is 9 cedis, the next a gallon is 12 cedis, the next month a gallon is 13, the next 14, 15. That's basically what inflation is. It's just used to measure the persistent increment in general prices of goods and then services. On the market as well, we have what we call CPI, which is released every month. The one we're going to look at is the inflation for the United States dollar, because we basically know the dollar is the strongest currency in the world, and mostly any major fundamental about the dollar affects almost every other currency pair. So the strongest form of fundamental which is actually released on the market is without a doubt CPI. There are so many things that happen to the currency pairs, especially the dollar pairs. So today I'll be explaining to you how to pay close attention and then take advantage of this, what to look out for that lets you know whether the dollar is actually going to be strong or it's going to be weak based on what the CPI tells us. And then to trade this, you need one very important tool, which is Forex Factory. Forex Factory is basically the website we use to analyze the market from the fundamental point of view. It means that this is where we get any form of news or economic data which will affect a particular currency on the market. Let's go back to the last inflation we got on the market, which was on the 14th of November 2023. I think that day I was on vacation, so I was actually with my trading partner on Instagram Live. So if you're here and you're not following me on Instagram, click on the link in my description to follow me on Instagram for all my trading updates there. We are actually on live explaining how to take advantage of this CPI. This CPI dated back to 14th of November 2023. It was released on the November 14th. Normally, anytime CPI is released, they have three data. We have the core CPI, we have the CPI month on month, and then we have the CPI year on year. Let me start with the very first one. When we talk of core CPI month on month, they are basically looking at what change in prices of everything with the exception of food and energy. They measure price increment of every single thing produced or consumed in an economy with the exception of food and then energy. And it's month on month. It means that if we are currently in December, the one which will be released now is November. So it means that month on month, they are comparing what last month's own to previous month's own. It means that they are basically comparing October's inflation rate to November's inflation rate, whether it went up or it went down, which they will announce. And then the next one is CPI month to month. This particular CPI actually focuses on the prices of every single thing, including food and energy. And it's month to month. It means that what they compare the previous month to the current month, they look at whether the rate has actually increased or it has decreased, which is what will be stated here. And then the third one, which is the year on year CPI, which also measures everything, including food and energy, basically comparing November 2023 to November 2022 to tell what the rate is, whether it has increased or it has decreased. Normally, before any particular news is released, analysts, economists normally make a forecast or a speculation what the data is going to be. In October, the rate released for September was 0.3%. They forecasted it to be the same, to remain the same. In the previous month, the CPI month to month was 0.4%. They forecasted it to go down to 0.1%. And then the last one, which is what the CPI year on year was for the previous month, 3.7%. They forecasted it to actually go down to 3.3%. All in all, they were actually forecasting weakness in the dollar. I'll explain to you why when inflation goes down, the dollar actually becomes weak. So it's actually two things. Either expecting the currency to be weak or you're expecting it to be strong. So if you're basically expecting weakness in the dollar, it means that inflation is going down. But someone will ask, inflation is not a good thing. So why does the dollar become weak when it goes down? And then why does the dollar become strong when inflation goes up? That's actually the effect inflation has on the dollar. Anytime inflation goes up, the dollar would increases in strength. Anytime inflation goes down, the dollar actually decreases in strength. To explain this, I want you to understand that inflation is actually tied to interest rate. So interest rate is normally what they pay you for saving your money in the bank. So now let's look at interest rate from the lender's point of view. It means that from those of us who actually save our money in the bank. When you save your money in the bank, you know you actually paid interest on what you save in the bank. So anytime inflation goes up, it means that we have more money chasing few goods or commodities in the country. It means that if we all have money and we want to buy a particular thing, you know that there will definitely be a shortage of that particular commodity, meaning that what the price of that commodity will go up because all of you have money and then you want to buy it. But if there's not much money in the system, it means that people don't have enough money like that. Prices will actually go down because there will not be enough money to buy the products and the services in the particular system. So if we all have money and want to buy a particular thing, the prices normally goes up. That's what inflation is. So the price will keep going up as long as we all have money. And then if we do not have money, there will be surplus because what? The prices will keep going down because we are not rushing to buy that particular service. If there's a lot of money in the system, it means that what inflation will actually go up because we are all holding our money. So what does the bank do? The central bank now increases interest rates to incentivize us to actually go and save our money in the bank to attract more interest. You realize that reduces the amount of money in circulation. On the other hand as well, inflation going down, they also would lower interest rates. So we can now be disincentivized from saving in the bank. We now want to withdraw from the bank and then come and spend. So you realize that if inflation goes up, what interest rates will go up because we have a lot of money in circulation in the system and they want to incentivize us to actually go and then save our money in the bank. That's the effect it has on it. And then inflation going down also means that what? There's not a lot of money in circulation. People are not spending as much. So they want to incentivize you to spend by reducing interest rates. It means that the money you are saving in the bank, you feel is worthless because you're not making as much money on it. So what do? You now withdraw and then you spend. So that's the reason why the dollar goes down when inflation reduces and then it goes up when inflation increases. So now that we understand the effect inflation will have on the dollar, now we want to see how to actually trade it. If you come to any single news, you have something we call detail over here. If you click on the detail, it tells you everything I've explained. It tells you how it will affect it. So you see it here, actual greater than forecast is good for currency. It measures change in prices of goods and services purchased by consumers excluding food and energy. You realize that every single data is here, but to cut everything short, the simplest way you can actually take advantage of any fundamental is to just look at the color. Anytime any news is released, if the color is red, you're expecting the currency to be weak. Anytime any news is released or any economic data is released, if it's a red color, you're expecting the currency to be weak. If it's green, you're basically expecting the currency to be strong. And then one very important thing I want you guys to understand is that the best time to take advantage of fundamental news is when all the three is the same color. It means that core CPI, CPI month to month, and CPI year on year, the best time you want to trade them because you know the direction is going to be solid is when they are all of the same color. It means that when they are all weak or when they are all strong. You don't want some to be green, some to be red, because mostly in that particular instance, the market will go in one direction and then reverse and go in the other direction a few minutes later. You actually want it when all of it is of the same color, meaning that it's all going in one direction. Either all of it is strong, which is green, or all of it is red, which is weak. So now that we know what the dollar is going to do, it means that now we know the dollar is going to be weak. And the first thing you want to look at anytime a fundamental data is going to be released is DXY. DXY is the determinant factor. DXY is what tells you what will happen. Let's go to the 4-hour time frame and let's go to this particular date when the inflation was released. So you realize that the inflation was released here. Look at the exact time the inflation was released. Let me place a horizontal ray here. So you see the extreme weakness you see in the dollar is as a result of what the fundamentals said. So you either want everything to be red or you want everything to be green. So now let's come back to DXY extreme weakness. It means that you want to now zero in and come to the exact time the news was released, which is what the 30-minute time frame. Normally it's released at 1:30 p.m. So now let's go all the way back to November 14th, at 1:30. So November 14 at 1:30, this is exactly when the news was released. Now let's cut everything all the way back. So you realize that this is what you see on the XY. It dropped all the way down here. Basically, the dollar is going to be weak. So if the dollar is going to be weak, which pairs are you trading? Look here, I've listed them here. So you realize that I have a whole watch list for my USD fundamentals. If you look at my screen here, you realize I have USD, CHF, GBP, USD, Euro, USD, AUD, NZ, USD, and gold. But the ones I normally like to look at are 1, 2, 3, 4. We've seen what the XY is doing, falling extremely. So now let's divide the chart into two and then look at the other pairs, what happened to them at the exact time as well. So now we've split our screen, Friday, November 14th here. Now let's go to GBP USD as well, and then go back all the way to Friday, November 14th, and see how GBP USD, and just compare it, just oppose it with the DXY. Let me show you how, things went on that particular pair as well. So this is November 14th, exactly 1:30. This is what we saw on GBP USD as well. So you realize that you see what the exact opposite happened here. The XY dropped strongly, GBP USD also rose strongly. How many pips did even the first candle give us? You can see on your screen a lot of money was made. You can see on your screen a screenshot of the trade I took on it. The first candle gave us 100 pips, easy, 100 pips in the first 30 minutes. If you want to continue all the way up to see how it ended at the close of the day, I'll switch back to the 4 hours so you can see that. Then let's go to Euro USD. Now we see clearly 1:30 p.m. Euro USD as well. Same exact movement, strong push to the upside, the opposite of what happened on the XY. Then we now look at our antipodian AUD USD and then NZD USD. Now look at AUD USD, you see it mirror what the same movement. NZD USD also does the exact same thing. So we now look at NZD USD at exactly what 1:30 p.m. This is what they also did. So you realize that all of them went for a straight push to the upside, exactly opposite of what the DXY did. Let's go back to GBP USD and let's go to the 4-hour time frame. Let me show you how you could have also traded this on the 4-hour. You see how it looks on the 4-hour, exactly when the news was released. You're already in this trade. You have your stop loss at the bottom of this range as well, targeting at least this point as your TP, which is what, about 125 pips. You are risking about 40 pips. So risk to reward 1:3. Then easily it smashes your both take profits and you close it. Then you are basically done. So you can either choose to scalp it. A lot of traders scalp it. If you're not that experienced, just scalp the fundamental, take your profits and get out. But if you know your experience, you have the know-how to actually hold trades through extreme volatility, you can now use your 4-hour to take a swing position on it or even day trade on it. It's all up to you. So this is how I trade with CPI. You see how extremely smooth it was. Like I said, I always prefer it when all the news, the core CPI, CPI month on month, and then the CPI year on year, they are all going in the same direction. The same applies for NFP as well. I'll explain NFP in my next video, but now let's just focus on the CPI, which is what inflation. You want all the data to tell you the dollar is going to be weak or to tell you the dollar is going to be strong. That's the best time you can actually make a prediction, because you're actually not expecting the market to change direction. But if one is strong, one is weak, one is strong, two are weak, you realize that mostly during that particular instance, what happened is the concept we call fading. Fading happens when the market goes in one direction, reverses in the next minutes into another direction. You don't want that. You want a perfect trade, a perfect direction. Always take advantage of the fundamental if all the data you get is geared towards one direction. I hope this video was extremely helpful and you're able to write down enough information. If you have any questions, my comment section is always open. Feel free to ask in the comments. I'll answer every single question. If there's any other concept you want me to shoot a video on, feel free to say it in the comments. This YouTube channel is yours, so every single thing you want me to make a video on, I'll gladly do so. And then I also want to thank each and every one of you. We recently hit 5,000 subscribers. We actually attained this feat in about 3 months. In just 3 months of opening this YouTube channel, we have actually surpassed the 5,000 subscriber mark. The next target for us is to hit 10,000 subscribers. We need more of you to subscribe to this channel so a lot of the valuable information released on here reaches as many traders as possible. I want each and every one of you to subscribe to the channel, like this video, share it to as many as possible. Also leave your comments in the comment section. You can also keep up with me on my socials: KOMMONFOREX on Instagram, KOMMONFOREX on Telegram, KOMMONFOREX on Twitter, KOMMONFOREX on TikTok. Also hit the link in my description to sign up with my recommended broker. My recommended profile is also in the link in my description as well. If you want a trading community which helps you improve as a trader, hit the link in my description to join my Telegram community, the KOMMONFOREX trading community with over 12,000 active traders. Thank you very much for joining me in this one. See you in the next one.